Hello and welcome to the F&O Show on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Darshan Mehta. Good morning, Agam.
Good morning, Darshan. I'm Agam Akil. The headlines. It's a strong start to the trading week for the Indian markets. The Nifty reclaims 10,850 in opening. India Wix remains flat. And open interest surges in Torrent Power as traders take fresh long positions in its stock futures. Vedanta gains the most in over a month at opening after the National Green Tribunal orders reopening of its Tuticorin plant. And Congress names Chhattisgarh's party president Bhupesh Baghel as the next chief minister. He will take oath today. And legal minds are divided over the government's application to correct a paragraph in the Supreme Court judgment on the Rafale deal.
Okay, let's see what the markets are doing at this point of time. It was a muted start, but the traction seems to be picking up for the Nifty. It's up almost 45 points at this point of time. Decent open interest build up currently seen on the Nifty. The Nifty is seeing open interest build up of 1.5% currently. The Bank Nifty is seeing open interest build up of 8% at this point of time. So there is definitely traction that's seen both on the Nifty and the Bank Nifty. The Bank Nifty is up almost 135 points at this point of time. Pull up what's happening as far as open interest build-up is concerned. At this point of time, 11,000 seems to be the biggest resistance that the market is seeing at this point of time. So call writers are active at 10,900 to 11,000 level, and put writers are active from levels of 10,800 to lower levels. But this scene does certainly indicate the fact that it's the put writers or the bulls that are in focus today. What is happening in trade currently? Where are positions being taken? You can clearly see that call writers are shedding positions in open interest, and put writers are even writing in at 10,800 and 10,900. Giving an indication that there is more traction on the market at this point of time. So that's something that we are seeing. Agam, stock specific, are you spotting anything interesting?
Oh, yeah, sure. So I'm going to start by talking about all the stocks which are looking at a substantial increase in open interest based on the kind of moves that we've seen. So let's build that list out. And there you have a Torrent Power, as I was suggesting earlier, is seeing longs, and as we are seeing longs in the EML as well. Both these stocks are advancing in trade, and there has been some momentum building up towards the upside. Biocon, on the other hand, is among the few losers in today's day of trade. That's down by as much as 2.4% and 13% added in open interest towards shorts as far as Biocon goes. Vedanta, of course, advancing. It has given up some gains from early trade, but is still higher by around 2.8%. And Glenmark is the other one, trending higher by around 3.6% in today's day of trade. So accumulation there. Can we take a look at those stocks which are looking at unwinding? And Jet Airways, of course, which went into the F&O ban yesterday, or rather Friday, is seeing an unwinding, as we have seen in the case of Reliance Capital as well, which also went into the F&O ban last Friday. So unwinding seen both these counters, but not too much to seek for otherwise. Watching out for some of these counters like Vedanta as well as Torrent Power in today's day of trade, Darshan.
Okay, that's the trend that we're seeing at this point of time. We'll discuss most of these stocks in detail as the show progresses, but let's welcome our F&O experts for the day. Nirav Chheda of Nirmal Securities and Chandan Taparia of Motilal Oswal Securities join us on the show. Good morning to both of my guests. Chandan, I'll start with you. Good morning. The trend certainly seems to have reversed on the positive side. We are close to the 10,900 mark in trade. What is it that you are spotting? Are you confidently bullish on the market at this point of time, or are you cautious?
See, good morning. Overall, the market has been forming the higher lows from last couple of trading sessions. In fact, in last two trading sessions, it formed a narrow range price formation, and the supports are gradually shifting higher. We have seen Intech put writing at 10,800 and 700 strike, and because of that, the support of 10,750, 777 is likely to continue in the market. So as of now, I'll suggest to go on buy on decline strategy with a stop loss of 10,777 and expecting market to retest the recent swing high of 10,929, 10,940 kind of level. An important thing is that we have seen a decline in the volatility index by around 25-28% in last 4 trading sessions, and decline in the volatility with rising put call ratio indicates that overall bullish setup of the market could continue. And because of the put writing and the call OI congestion, we are expecting positive range bound move with support of 10,777 level in the market.
Okay, Nirav, good morning to you as well. What is your approach in the markets? Based on your views, how would you employ derivatives?
Yeah. Good morning, Agam and Darshan. See, For the index, I believe, I trust Chandan as well. I believe Nifty can go up towards the 11,000, 11,200 odd mark. As he said, the PCR is actually shot up, the VIX has come down. Those are good things for the market. Also, there's some good, put writing which is happening at, 10,500, 10,600, 700 strikes of puts. So again, that does tell us that the base is coming up. A week back, 10,200 at the highest open interest. Now that has shifted to 10,500. So very well, you can see probably, that shifting again to 10,700 in a few days time. So that is a good sign. The only resistance here is around 11,000 odd levels, which has the highest call base with about 50 lakh shares. But the momentum for Nifty is on the upside. One very important thing that happened in the last week is that Nifty had broken the 50 and 200 day moving average, and in a week, a 500 point move has come from down, towards 10,800, and now we are above both the important, moving averages, and the support now for Nifty lies at 200 day moving average, which is around 10,775 odd levels. Unless that is breached, I do not think Nifty will fall further. That will be a good support area for Nifty. So my strategy would be to employ a straddle, just because we've seen a 500 point move in the last week. I believe Nifty can go up towards 11,200, but having a hedging position would be the best option. One can be buying the 10,900 call and put both. The combined premium for the same comes to around 200 points. You can keep a stop loss of about 50 points loss. That means if your total premium comes down to about 150, that is your stop loss, and your target should be around 300 points. I believe at least a 300 point move in the next 2 weeks is very likely for Nifty.
I just want to explain the strategy. A long strangle is something that Nirav had indicated. Now let's take a look at what this means for the people who don't understand it. A long strangle is when one buys an at the money call and at the money put in anticipation of increase in volatility. When volatility increases followed by an expansion in option premium, the strategy becomes profitable. So what Nirav is anticipating is there could be a move on either side of the market, and that is why the premiums and options premiums will expand, and that is how you will be making money. That's the view on it. But Chandan, what is the strategy that you have in terms of the Nifty, or if you have something on the Nifty Bank also?
See, first talking about the Nifty, I'll continue to be on the bullish bias because of the data setup. However, the call Y is intact at 11,000 strike, which may restrict upside momentum, but that is still giving the scope of further 50, 70, 80 points movement in the market. So as of now, whether one can go with the buying call or can go with the bull call spread. 10,900 call, which is now trading near to 85, buy on small dips near to 80 by putting a stop loss of 50, and this call can move towards 140 kind of level. Or one can go with the bull call spread by buying one call of 10,900 and selling one or two call of 11,000 strike. So overall the view is positive range bound, or one can continue to be with buy call or the bull call spread. Now talking about the bank Nifty, it is immediate support near to 26,666 kind of level, and I am following this level from last couple of days. Even on the last expiry, it surpassed the 26,666 and headed toward 27,000. So in last two trading session, exactly it was supporting to the same. Until it holds this level, I am expecting Bank Nifty to test 27,000, and about 27,000, a fresh leg of rally cannot be ruled out, which may take it to 27,250 kind of level. So here suggestion is to go long with weekly 27,000 or 27,100 strike call to continue to be with positive stance of the market.
Okay, so there you have it. That's the Chandan's strategy on the benchmarks. But Chandan, I'll come back to you on the stock-specific strategies that you have for us today. What are you betting on?
See, yeah, if you ask about the sector, then positive on the selective PSU or the stocks, positive on the auto counter. But stock specific, we have selected two trades. First is buy on TVS Motor. The stock has seen the strong momentum just couple of days back when the volume has surged by more than 3 to 4 times on the daily average. That day it has seen the built up of long position by around 35 to 40%, and the stock is holding the gains above the same but stuck in a range. Now expecting the further momentum because of that follow process. So recommended to go long on TVS Motor with a stop loss of 565 for an upside target towards 595 kind of level. Apart from TVS, we have positive on the Escorts and Maruti as well. And the Nifty Auto Index has given a consolidation breakout on the daily and the weekly scale. Second trade I'll select is the buy on Voltas. This stock has been making higher highs, higher lows. It has given a consolidation breakout from its multiple hurdle of 565, 570 zone. It has seen the strong momentum in the opening and now witnessing some dips from the lower level. So I think these dips can be utilized for the buying opportunity by putting a stop loss of 565, and the stock has potential to again move towards recent high of 595, 600 kind of levels.
Okay, so those are Chandan's strategies on stocks. But Nirav, what about you? What stocks are you betting on today?
Yeah. See, one stock is also from the auto sector, but I'm betting more on Tata Motors here. If you see, the data, Tata Motors looks like a lot of shorts have been liquidated in this counter. The indicators on the longer term charts are actually in the oversold zone, and now, trying to come up. There's been some good volumes which have been witnessed around the 165, 162 odd levels in this stock. So most likely this stock is going to now, fire up towards the 200 odd levels, probably in this month itself. So one should be ready for that. I believe for a trading perspective, one can look for 190 target. You can buy at current levels with a stop loss of 162. The second one is a buy call on MGL, Mahanagar Gas. If you see, in the whole downward move, it did not participate. It was consolidating in between 820 on the downside and about 860 on the upside. It has witnessed a breakout above 860 recently, and with good volumes, the good volumes had been picked in that range. So I believe this stock can actually move up towards 1000 odd levels. One can buy at current levels. A good high-low formation is going on in this counter. One can buy the futures with a stop loss of 865 and expect 910 as target for trading.
Okay, I just wanted to address some flashes that are coming in your screen. IHH is now seeking legal opinion on what should happen on the Supreme Court. Remember, on Friday, the Supreme Court came out with a notice indicating that it's a status quo on the sale of Fortis Healthcare to IHH. Fortis had clarified that it will be basically the stake sale will go through. It's only the open offer that will be in doubt. Now remember, the open offer is opening tomorrow. IHH is giving its view on the same. It's seeking legal advice. So there's no material change that comes in. It's just IHH has given a note on the same. So that's the trend that we're seeing on the markets at this point of time. Let's get in and start discussing some important stocks for our viewers. First of all, Power Grid and NTPC are the two stocks that I want to address. Now the news here is that both of them have managed to move up on decent open interest build up. 6% open interest build up on Power Grid. NTPC is also up close to 5%, is up 2% on open interest build up of 2%. Now remember, the draft that came out on CERC indicates there will be no change in tariffs and no change in the return on equity on these two counters. So that's extremely positive, and that's why both these counters have reacted. We'll ask our guests what they believe on these counters. So Chandan, I'll start with you. You go with Power Grid. What's your view on Power Grid?
Yes, comparatively, the stock has given a consolidation breakout and seen the built-up of long position by around 6-7%. However, it witnessed some cool down from higher levels, but overall trend could remain intact to positive, as given a strong consolidation breakout by surpassing above its 50-day exponential moving average. The stock has immediate support near to 188, 189, while on upside it has again potential to retest the recent high of 197 to 200 kind of level.
All right, and Nirav, let's take up NTPC with you, because it's clearly making a move towards its crucial daily moving averages. How are you reading trade on this stock?
Yeah. See, for NTPC, it needs to break out above 155 odd levels. It is in a downward sloping trend line formation and continues to witness selling on the higher levels. Its 50-day moving average is also placed around 150 odd, so that also becomes an automatic resistance. So as of now, I believe one should not be buying this counter at least till it goes above 155, or one can buy around the 140, 135 odd levels on the downside. At this level, it is not a buy. I believe let it come down and then you can buy.
One interesting point, Agam, which I was seeing and which was highlighted to be by the producer, is that if you see the consensus that is there, what the sell side has on both Power Grid and NTPC, there are zero sell recommendation. Right. At best hold, but 80%, more than 80% of the analysts recommend buying NTPC or Power Grid. So the potential upside for Power Grid on the fundamental side is almost 18%, and I'll check it for NTPC also. And
about 29%.
Yeah, so Yeah, it's a little slow for my end. Yeah, it's 29%, but 90% of the analysts recommend buying NTPC. So that's the trend that we're seeing at this point of time.
Well, but okay, so we'll shift with that. We should focus to Glenmark, because this is another very interesting one. Considering it has made a dash upwards, it has gained tremendous strength over the last one or two odd weeks. Not only has Glenmark done that, but it's also outperformed a lot of the other pharma names, some very big pharma names. So there is a little bit of a resurgence in place here. Of course, about a few weeks ago, Darshan also had a word with the management of Glenmark, and it's seeing a fresh longs at this point in time. Is there anything else that stands out, Darshan?
Yeah, so for Glenmark, I'm also rather surprised, because if you see the Bloomberg consensus target, it now suggests that, you know, it's outperformed, and the negative, there's an impact that there could be a potential 5% downside on Glenmark at the consolidated, because the run-up has happened. It's not very expensive. It's trading at 18 times compared to, you know, your Suns and Lupins, which trade about 20-22 times. The reason that Glenmark commands a lower multiple is that, you know, debt is a big issue, and they haven't been able to get out, and the US product pipeline. Yes, you're right, I spoke to them, but they didn't disclose the pipeline, but they are saying that they're pretty comfortable in resolving the debt once a sale of their API business goes through. Right. So, but we'll ask our guest what they believe. Chandan, any view on Glenmark? It's been a marked outperformer compared to the peers in the pharma space. How do the F&O trends look to you on this in this counter?
Yeah, the stock is doing well from last couple of trading sessions, forming the higher highs, higher lows. And today itself, it has seen the open interest addition of around 10%. It has surpassed the previous hurdle of 685 zone, and I think the stock is potential to move to a 700, 720 kind of level. So I think long position can be added here for an upside move to a 720 kind of zone.
Okay, I'm going to take a view with Nirav as well. Nirav, how are you seeing trade on Glenmark Pharma?
Yeah, see, if you look at the chart, you know, such formations are very difficult to get. If a long-term formation like this takes place, you know, there are multiple, multi-year high breakouts which happen in a longer-term trend. So for Glenmark, it is a rounding formation which is taking shape. Generally, this rounding formation always takes time. You know, if you see week on week, Glenmark must be only about 2% up every week. From the last 1 year odd, and this is going to continue for the next 6 or 8 odd months. I believe Glenmark is poised to move up towards the 1,000, 1,200 odd levels, probably in a year or two. But it will be slow. So from trading perspective, I also agree with Chandan that 700, 720 probably again it will witness a certain amount of resistance there and come down again, and then again slowly start to move up again. So I believe this is a portfolio stock. One should be buying this on every month. From now to a 12th-month perspective, one should be buying every month, and you can expect about 1,200 in about a year or two.
Okay, so positive cues coming in on Glenmark. Let's stick with pharma. There's another stock in the pharma space which I want to address, and that is Biocon. Now it has taken a sharp knock. It's down almost 2% in it. So there's and the open interest build-up is decent. It's 15% open interest build-up. Almost 60 lakh shares is the open interest build-up that's been seen. Now there are two news to it. One on the positive side, in which the counter reacted positively in the morning, was that the Telangana plant got cleared. The second and the negative news is that something that came in overnight was that the FDA has approved Teva's and Celetrion's biosimilar for Herceptin. Now Herceptin is a big drug for Biocon. Now ideally they can't clearly launch, but competition will come in the next 2 years. And what this IDFC note that has come out is saying that this will provide a very small and limited competition window for Mylan and Biocon. Remember, Mylan and Biocon are partners in this, which will mean that whatever was anticipated that blockbuster profits will come in will be curtailed by a little time, and that's why Biocon has reacted negatively. That's the fundamental view. Let's get in the F&O and technical view from our guest. Nirav, I'll start with you. Biocon, one of the most expensive stocks on the pharma space, has been outperforming. At this stage, if someone has to take a position, what should they do on Biocon?
Yeah, Biocon is not a trading stock. It is in a small range of about 50 odd points. It has been moving in between 600 on the downside and about 650, 660 on the upside since January of this year. I believe this trend is likely to continue further. There's no volumes which have been witnessed, higher volumes, in this consolidation. So this consolidation might just take, another 2-3 months more. I believe one should not be trading in this stock. If at all one has to trade, the trade would be on the buy side if it comes towards 600, and on the sell side if it comes towards 650, 660.
Yeah. Right, so that's Nira's view on Biocon, but I'm going to pull up Vedanta right now because, well, it's seeing some amount of strength today, largely on account of the news that it's got a go-ahead to reopen its copper smelter in Tuticorin, and that's the reason why it is advancing by around 3.4%. And its open interest, of course, is up as much as nearly 13%. Currently at around 289. Darshan, I believe you also have a query. Well, if you could like take a look at it, I believe one of the viewers has actually shorted the.
Yeah, so I'll think there's Mahesh Yagnik who said he shorted 58 lots of Vedanta at 212 and covered 30 lots at 208. So he's still, almost 28 lots that he's left with Vedanta, which he's short. What should he do? So let's get that out. He's still short 28 lots of Vedanta at 212. Let me, Chandan, can you take this query? Vedanta, he's short at 212. What should he do? Should he hold on, or do you expect the counter to bounce even further?
So my suggestion is better to exit because the stock has bottomed out. It formed the double bottom on the daily scale. It surpassed the 50-day exponential moving average, open positive. And I think again after some dips, buying interest could emerge. So there are two suggestions. Either is suggested to keep the trailing stop loss of 213 and 0.50. That is the high of the day, or better reduce the position. What I suggest that a dip towards 205, 206 can be added with a stop loss of 201, and the stock has again potential to move towards higher levels.
To you, Nirav, what's your view on Vedanta?
See, for Vedanta, I believe the trend has changed to positive. Even though it has come down today, I believe there is a clear breakout, above the 202 level. So unless Vedanta again, falls below 202, one should not be shorting this counter. So I believe he should be exiting positions on the short side for sure.
All right, so that's the view on Vedanta, and since we are with the metal stock, or rather the metal SPAC, let's pull up SAIL as well. Now, SAIL is another one of these stocks which has had a very interesting run in the recent times, and it has seen a lot of volatility too over the past 1 month or 2 months. And if we can actually have the chart up and see how SAIL has been faring over the past 1 month or 3 months for that matter, and that will also give you a fair idea about how the stock has been trending. So that's your 3-month chart. It has been declining, even though when it's down as much as 32% over the last 3 months. It's advancing today, but the real question is this now a bit of a turnaround, or, well, is there more declines to come in? Is that what we can expect going forward? So Chandan, I'll come back to you. Today, it's up around 3.3%. Would you buy into this bounce, and would you read that the weakness is over and there could be some strength up ahead, or would you want to wait, or perhaps this is a good opportunity to short?
You're talking about the Vedanta?
No, I'm talking about SAIL, actually.
Yeah. So Steel Authority, however, the medium-term structure for the counter is weak because it was continuously making lower top, lower bottom formation. But it has gone to the deep oversold territory, and it has seen a positive divergence. The way it has recovered from 49 kind of level, and now some negating of the negative trend is visible of the lower top, lower bottom on the weekly scale. Some up move could be seen. So because of this structure, I am expecting the stock to move towards 58 to 59 kind of level. So medium term structure is weak, but on short term basis, expecting a bounce back of 5-6% towards 57, 58 kind of levels.
Okay, and Nirav, how would you deal with SAIL? What is your reading here?
Yep. See, on the daily charts, if you look at this counter, it has fallen consistently from 70 odd towards the 50 odd levels, without every week on week it has been falling without 1 week of, an up move. So that up move is very likely now, but the longer term trend continues to remain negative. This just might be short lived up move up till 58 or 60 odd levels. One should be buying here, but with a strict stop loss of 49 and a strict target of 58 or 60. If it comes there, book all profits and again look for shorting opportunities, because I believe this stock is not done with its sell side yet. It can still come down towards the 45 to 40 odd levels in the medium term perspective.
Okay, that's the view that's coming in. The next stock that we want to address is India Cements. Now, after a few good days, again, India Cements has actually gone back to much lower levels. It's down almost 1% on almost open interest build-up of 3%. Cement as a pack has not been showing a lot of traction. Nirav, what should one do on India Cements? Would you buy at this level, or do you see more potential downside?
Yeah. See, India Cement, if you look vis-a-vis the market, the market has really come up, but India Cement has consolidated for a bit in between 85 on the downside and about 95 on the upside. It is in consolidation. One should not be shorting this counter at this level for sure. Some good volumes have come in, and the rollovers have been good actually in the cement space as a whole. So I believe this stock can come up, but I'm not buying here. I'll be buying on a breakout of 95. If I get a good volume breakout above 95, then surely I'll be buying, for a target of about 120 odd. I'll be keeping a stop loss of about 89 after the breakout.
All right. Well, with that, let's take a look at if there are any interesting stocks that have come on our experts' radars in the last 20 odd minutes. So, Chandan, besides the stocks that we've spoken about, is there anything else that you're spotting right now that looks good towards the short or the long side?
See, I see the positive price breakout in the Nifty Auto Index, and because of that, selected auto counters are likely to see the buying interest. So Maruti is on radar. The stock is forming the higher lows, and it witnessed the strong recovery in last hour of the trading session of the previous day, and today sustained buying interest is visible. So I think one can put a stop loss of days low to play the upside move towards 7900, 7950 kind of levels.
Okay, Nirav, suggest if you can suggest one stock that looks good for this week if someone has to buy one stock for a short term and something he has to hold for the rest of the series. So if you can suggest two stocks that's looking interesting apart from the ones that you recommended.
Yeah. See, the two stocks can be Raymond. If you see, it has witnessed a price volume breakout, above the 840 odd levels, and continues to sustain above the same. This breakout had come in the last week, and this stock is still positive today. So I believe this can go up towards the 920, 930 odd levels probably in this week. This is a high beta counter, so the movement will be pretty fast. The volumes are also good in this counter. The second one will be Kajaria Ceramics. Sorry. If you see, there has been a long down move in this counter, and recently, some big buying has happened around the 400, 350 odd levels in the last few weeks. This stock has come up and has broken out above the 440 levels. I believe this stock can actually move up towards the 500 levels in this series as a whole. So one can buy this counter with a stop loss of about 435, and one can expect about 500 as your target.
All right. Well, with that, I will take a moment to thank both our experts, Nirav as well as Chandan, for taking us through their views on several of these stocks, also helping some of our viewers with their queries. And with that, it's a wrap in this edition of the F&O Show. But for more news and updates, stay tuned to Bloomberg.